Welcome to the Blockchain Backer channel, where today we're going to take a look at the Bitcoin price chart and do this video a little bit differently. You're probably thinking to yourself, man, that was a weird intro. Hey, what's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. And today, we're having a different show today. We're actually going to be taking a look a lot over here at the Bitcoin price chart, but I'm actually going to have a guest on today's show. If you guys aren't aware of TXMC Trades over there on Twitter, he also has a YouTube channel called Alpha Beta Soup with TXMC. And I thought it would be awesome to have a guest on the show where we're going to deep dive into even more data that goes on in here. As you may know, I ran a poll just a few days ago there on March 14th asking what was going to be the next price action for Bitcoin. And it was pretty close to being evenly split. About 45% of people believe Bitcoin's dropping to 25,000. 55% believe it's going to 51,000. And at the time when the poll was done, the price was 38,800. Currently, we're at 40,500. So still relatively close to that price area. But I enjoy watching Alpha Beta Soup with TXMC over here on YouTube. I've never really had guests on my show before. It's Friday. I was like, let's do it. Let's look at some more data. Let's see if we can get a look under the hood of what's going on with Bitcoin to give us an indication of what investors are doing with Bitcoin right now. Can the on-chain data give us a different picture outside of just looking at the price chart? So I am very happy to bring onto the show who I would consider a friend, TXMC from Twitter and from YouTube. TXMC, welcome to the Blockchain Backer Show.
Thanks, BCB. I'm very excited to be here, my dude.
I am equally as excited to have you on here. I've been following you on Twitter. I saw you when you were just you just had a couple hundred followers over there on Twitter, and now I know you have over 40,000. You have your own YouTube channel. You're very intelligent. I've gone into a lot of the Twitter spaces, the Bitcoin spaces. You always get invited on stage because you have such an elegant way of explaining things in easy to understand ways. You're quick on your feet. I just like a fan. I'm happy to have you on the show, man. I appreciate it. And I was hoping today that you could teach us a little bit about on-chain and a couple of the other things that you look at in the market.
Yeah, that sounds great. I've been a big fan of your work for a long time, since before I even had my own Twitter. And so I'm very excited to be here.
Awesome, man. Well, to the people watching this, if you like this kind of content that we're about to do, please hit the thumbs up button, leave a comment down below. Let us know if you enjoyed this. TXMC has gotten popular on Twitter for a lot of the different analysis he does for the cryptocurrency market and for Bitcoin in particular. And one of the key things that he's focused on a lot in the past, and I know it's broadened way beyond this, but is just talking about on-chain data and whether or not it can provide us any type of insight into what's going to happen or has happened with the Bitcoin price chart in regards to people holding Bitcoin, buying Bitcoin, pulling it off exchanges, throwing it onto exchanges. And so I've invited him today to come and kind of just give us a little brief explanation of what on-chain data is, at least the simple things for on-chain data. And if he can give us kind of just like a zoomed out look at the market right now and how Bitcoin is behaving based on history of how it's behaved in previous market cycle time periods. So I'm not going to hold this floor for too long, TMC. I'm going to pass it off to you. If you can kind of just give us like a little bit of an introduction into on-chain, or if you even want to give a little bit of an introduction about yourself at all.
Sure. Thanks, BCB. And, I have a tendency to ramble. So if at any point you want to interrupt me, please feel free to jump in. I do love to study on chain. I'm really interested. My interest began with Bitcoin specifically, and it's in studying it and trying to understand it. I am interested in the crypto market broadly, but I do focus the majority of my study on Bitcoin, and I find on-chain to be really fascinating. And there's a lot of kind of cool insights we can pull out of it that have not existed in traditional markets before. And I think that's what interests me about it the most. And what on-chain is really is just the study of Bitcoin's ledger. I mean, at its core, Bitcoin is a network of computers upholding transactions for all time, right? That's basically what it is. And when we study on-chain data and we pull out new metrics and we layer in all this information, we're really studying investor behaviors over time. We're seeing Bitcoin's adoption. We're seeing people buying and selling Bitcoin, holding it for periods of time. We can see their balances. We can see when they choose to transact it, where they're sending it to. It's all pseudonymous, but when we look at it at scale, like we're looking at over many years and across many billions and trillions of transactions, we start to unpack market cycles and investor behaviors and all the cool stuff that we can learn inside of that.
I think that's pretty
Where
cool because you can't do that with any other assets, right? Except for crypto. And right, I'm
you really
talking about
can't.
Bitcoin. Yeah.
And there are other cryptos you could do this with, but Bitcoin is the one people have put the most time into developing these metrics for. So that's the one that tends to have most of the data for it. And I think maybe one of the basic places we could start, one of the more core places, is looking at active addresses. So each day there's a bunch of people transacting in Bitcoin, and each of those people owns an address with some Bitcoin on it, right? And when we count addresses over time throughout the years, we can see these surges. Now, granted, Bitcoin as a growing asset, and this is true for any other crypto, as an exponentially growing asset, in a lot of measures, the value tends to be up and to the right over time, right? Because there's just a long-term secular growth going on. But inside of that, there are rates of change where the metrics accelerate in bull markets and decline in bear markets. You can see some of that here on active addresses. Here we are in the 20, let me zoom in actually, take off some of the earlier years because those are harder to compare to modern times. Let's just look at the last couple of bull markets here. Get this at about 2015. Okay, so the previous bull market, we can see there's kind of a baseline growth of active addresses over time. And I'll even throw on a drawing tool on here. And we can see there's kind of like baseline active address growth over time, right? And even in bear markets, like we saw in 2018 and 19, the values fall down to this kind of forever rising floor of activity. And this is kind of always going on. But then on top of that, we also have these bull markets that tend to deviate from this lower channel, and they create these outsized spikes in active addresses.
That's pretty cool.
Now we saw that pretty heavily in 2017 and 18 and 2016 and 17, I should say. That was a crystal clear parabola. There was accelerating volume, accelerating activity all throughout the bull run until the blow off top that everyone's very, very familiar with at this point. And all that activity fell off sharply afterwards in the capitulation. These are people leaving the network. This is interest waning in Bitcoin all the way down to what I'm kind of calling the bear market baseline growth channel. Now, before I go into 2020, 2021, I just want to stop for a second and make sure you're with me so far. I haven't skipped over any details.
You're doing great.
All right. So the reason I think that this is interesting now to look at, one of the observations I'll make about the last year is, so here in 2020, 2021, we obviously had the surge, just like in 2017, right? We had our surge of addresses. And it started to fall off right around here, which is around May, which we know was essentially the end of the market. That's when Elon Musk tweeted that Tesla was no longer accepting Bitcoin for payment. That's when China banned industrial mining. That was when Elon went on SNL. There was a bunch of activity going on in this point, and that was really the end of the Bitcoin market. For that period of time. And we saw address activity falling off dramatically. Let me back up and take off some of my lines. There we go. You can see address activity falling off precipitously at this moment in time. And it fell all the way back down to our little bear market growth channel that we're talking about. But curiously, when we started to rally in the second half of the year, look at how different the address totals were. Look at how much lower they were from the previous bull market. Really a fraction of it. And my interpretation of this, in a sense, is we achieved an all-time high with almost a bearish divergence in the underlying activity for the network, which was nowhere near the fervor and the peak of what it was a few months prior, which I think is pretty interesting.
I think that's incredibly interesting because, we're always looking at the charts. You can derive your bearish divergence from many indicators. One of the most popular ones, of course, is your relative strength index or your RSI. But here you are looking at the actual blockchain. You're looking at actual numbers of addresses, and you see a reduced interest in actual Bitcoin. You see the price doing what a bearish divergence does, which it sets a higher price on reduced strength, reduced volume. Pretty crazy.
Yeah, like if you look at a traditional relative strength indicator on like Trading View, it started declining here. Didn't like this was really the top of RSI and it started setting lower highs into this period of time here, which is very similar to what we're seeing with active addresses. So there's a confluence there between the technicals that people use for trading and the on-chain ledger activity.
That's pretty amazing. So, almost you could say that the total address count is giving us a clue that Bitcoin, based on what we've seen in previous cycles, Bitcoin is in a bear market. Would you agree to that?
I would say so. I would say by this metric alone, and we know there isn't a single metric that'll give us the entire picture of the market, but from the perspective of active addresses, the second half of last year and even this activity we're seeing now is very much on the bearish end of what's possible for that metric. That's how I would frame that.
When we look at it, so we're looking at it from a really big picture right here. Is there a
Right.
way that we can look at it on like more of a micro level or explain it? Because, a lot of people who watch my channel, we don't have full understanding of, all of the different metrics that happen in here on chain and the behavior of what happens on chain. Can you kind of give us even like more simplified versions of things so we can kind of wrap our head around it? I've looked at individual you have address counts, you have exchange flows. Can you kind of show us those things too and how prices behave to those particular simplified kind of metrics too? I know on your channel you do a lot of like amazing stuff. You go deep down, you have a lot of more deeper detailed stuff, but I'm actually, kind of saying, can we look at like the super basic stuff?
Yeah, absolutely.
Cool.
So this was definitely one of the more foundational ones, I think. And you just mentioned another one that I wanted to show, which is exchange flows. What we're looking at here is called exchange net position change. And what we're showing is the 30-day change in the balance of Bitcoin on all known exchanges. And so when we talk about exchange balances in the context of on-chain analysis, we apply behaviors and intents to exchange flows rising or falling. And let me explain that. So when you see large deposits into an exchange, that is putting Bitcoin closer to a potential sale, right? That they're closer to the market. When you are withdrawing coins from the exchange, presumably putting them into one of your hardware wallets or cold storage or whatever, you're taking it away from the market and you're creating a friction between your ownership and the ability to sell it. By taking it away, it makes it harder to get rid of.
So we're
And so when we
essentially
see
talking
that,
about like if I pull it off of my Nano ledger and I go send it over to Coinbase, right? That's an exchange flow or an inflow into an
that's an
exchange.
inflow, and it would
Right.
show up as green on this chart here.
Right.
And then if you go withdraw it from Coinbase and send it back to your ledger, it shows up as an outflow and as red on this chart.
Got it.
And so the exchange flow dynamic that we've been watching for the last couple of years is pretty interesting. So exchange balances were actually growing for many years up until 2020 because the market was growing and new exchanges were coming online, et cetera, et cetera. But the actual all-time high for exchange balances was the March 2020 crash. Since March of 2020, we've been watching the balance on exchanges and the behavior in and out as a proxy for investor behavior, because that's really when the trend started to change. And if you look in May of 2021, when we started to see the market roll over, we saw precipitous, dramatic deposits of Bitcoin onto exchanges.
Can I
Is
stop you
that
there
bad?
too? I thought that was
Yeah.
awesome when not that I think it's awesome when it happened, but like if you show that, like can you put your mouse cursor right at the top of that retracement that happened right there? You could see there was a sudden onflow onto the exchanges that was happening before the crash ever even happened, right? That was pretty
Mhm.
amazing that it was kind of like a leading indicator right there that exchange inflows were happening right before the crash ended up happening.
Yes, if I put my cursor right here on the retrace, you can see it's already showing deposits accelerating for Bitcoin. If we look at the retrace here from the all-time high, we were seeing accelerating inflows of Bitcoin onto exchanges, and it persisted for a couple of months, right? Well into July. Or this is really the end of June, I guess,
Right.
is when it started to soften. And as price was able to rally after the B word conference, we got a little bit of a short squeeze here, which happened in the futures market and helped kind of push us off of the bottom. And after that, we saw heavy exchange outflows throughout August and it looks like into October, actually. An interesting observation that I'll make about the behavior of exchange flows now. If we look at the correction in the first half of the year, the first 50% correction compared to the most recent one, and we look at the behavior of investors looking to exit the market, it's vastly different, I would say. In May and June, this is an exit of investors, right? A large amount of Bitcoin. We're looking 100, 150,000 Bitcoin going on to exchanges. And then in the second run up, the second half of the year, the amount of flows was vastly different, much softer, more mixed outcome. And I think that this is showing two different investor sentiments happening in the same year.
Would you maybe interpret that? Like I'm looking over here at what happened in November and in January, how there's two different spikes of exchange inflows. No, I've here of 2022, right over here. Yeah, those
right
two.
Right here.
Look, you got one of them on the left. Is it, is that, the smart money sending the money to exchanges, wanting to get out at the top, and then it cooled off. And then the next one is money flowing in from people capitulating.
I think that that's a very fair interpretation. And, one of the other metrics, which maybe we won't get into today, that shows the spending of older coins, the more mature investors, that spending really started to come in this point of the market. As we broke the all-time high and set a new one here in late October, that was when we started to look at it was a lighter percentage than what we saw back here, but there was some spending of older coins, and that took place during this time. So I think that's a fair assumption.
Okay. And so if we look at what's going on right now, I think we could both agree it seems like it's net exchange outflows, right? People are pulling Bitcoin off exchanges right now rather than sending it in.
Yeah, I would say so. It definitely looks like there's kind of a net outflow trend here, right? Kind of a structural downtrend in flows ever since this moment of the market right here.
Okay. And so what we know or what we can interpret this data as saying is that whenever there's these big inflows that come in, that can either be smart money trying to get out early, and then at the same time, it's people capitulating at bottoms. And I think we saw that happen both times. And right now, the big concern, everybody, I prefaced this interview that we did by showing a poll that I ran last week, or maybe it was earlier this week, of what comes next for Bitcoin. Are we going to 51K? Are we going to 25K, right? And it's like it's pretty close to split down the middle. 45% think we're going to 25K, 55% think we're going to 51K. But if you were going to be looking at this data and if you were going to say, this one seems to be more likely, for me personally, I'm not going to make you, stamp your name on it and make a prediction based on some on-chain data. For me, I'd be saying this, if you thought it was going to be breaking out, you'd probably be panicking if you saw Bitcoins flowing into exchanges. If we saw a bunch of green showing up on this board right now, you'd be sitting there saying, oh man, people are bringing their Bitcoin onto exchanges right now. That's not a good sign. They can sell it at any time, right?
Exactly. That's how I would be interpreting that. It's almost like the absence of inflows is like a safe sign, because we can see steady outflows as exchanges are kind of losing market share to other institutions and things over time. I think we'll always kind of see mild outflows in a neutral market, but what we don't want to see for sure, as you were just describing, are large inflows, because that is a clear sentiment. That's a clear intent of putting your coins closer to the market. And so I think, we definitely saw a big rush of that here, and it took a couple of months to recover from that. And the deposits here at this all-time high, they came later in the market, right? That very different from what we were seeing back here, right? This was consistent outflows as we were breaking the all-time high right at this point. So it's different behavior, but I do think this is some profit taking from people who weathered, the 2021 storm.
Yeah. All right, that's all interesting. I think it's cool to see that at least right now, and a lot of people are wondering, we just showed some data that showed Bitcoin does appear to be in a bear market from a bigger perspective right now. But a lot of the people are wondering, are we going to get a retrace in here? Are we going to break down right here on chain? It's hard to really to determine that with like precision, right? But we can look to certain things that are favorable. And I would say it's better that we're seeing this than seeing a bunch of green on this board right now, right? I mean, you wouldn't want to see the green. it's
I
better that we're
agree.
seeing red.
And if we start to get the retrace and we get up into 50 and 52 and 55, where we know those levels are getting, then, and we start to see deposits, we start to see green inflows to exchanges, that could be a warning sign.
Nice. That's awesome. So that gives us something to kind of look forward to if we get that retrace come in and we see the exchange flows happening. People are bringing their Bitcoin in, getting ready to dump it.
Yeah, I would be cautious at that point.
Sweet. Well, hey man, for simple stuff, I know there was other stuff we could look at, like addresses that you can see their balances in them. Is that right?
Yes, we can. And we could look at those. So I can pull one of those up real quick and we could talk about it if you want.
Sure.
Okay, so there's a lot of talk about wallets. People post a lot of charts about different wallet sizes, different cohorts of people holding them, whales, minnows. There's lots of different names for them. And these metrics, these supply metrics, do have a lot of nuance in them. I'll say that before we start interpreting this, but there are still some things we can say about them, some signal we can derive from it. This is the number of addresses that have at least one Bitcoin. When you look at it over time, it's up and to the right. But similarly to active addresses, it has rates of change, right? And there are periods of time where it declines. Let's look at the 2017 market. We'll even zoom in a little more on it here. This value is rising, as it is always rising. The rate of change, actually, if I zoom out, the rate of change started growing precipitously into the parabola, right? These are more and more addresses accumulating at least one Bitcoin to their name, the rate of change of it growing. But you can see it started to decline. If I zoom in on this price action a little bit, it started declining right after the top. These are the unloading of addresses that have one Bitcoin. Now, the total sum is important to look at. We're looking at from about 720,000 down to about 690,000. So maybe 30,000 Bitcoin or so in here, 30,000 addresses with at least one Bitcoin were extinguished in this period of time. Relatively not a high number, but it is indicative of a behavior, right? On the backside of a move, people are distributing their coins. I do think it's interesting how this metric, I think we talked about this a bit before we started recording, how this metric started to decline here before the actual fall in 2018. I'll throw my drawing tool on here to make it a little more clear. This metric started softening before we actually got to the bottom in 2018. I do think that's pretty interesting right there. And it found a floor right after the actual capitulation.
Yeah, I think that's really interesting too, because out of all the on-chain stuff, that's why I tune into you. I let you explain all that really complicated stuff in an easy to understand way. But I can look at these addresses. This is like the simple stuff that I've looked at and tried to draw my own conclusions from what happens with some of these addresses. Like you mentioned, some of them are, nuanced. It's hard to read some things from some of them because they pop up and down. We'll probably take a peek at that here in a minute. But I find that interesting right there, that you can notice how this wallet size, wallet addresses that have at least one Bitcoin in them started to taper off and drop. And you can see in there how it was rising. Then it started falling off way before the capitulation ever ended up happening right in there. And it was kind of like a leader to tell you that that was going to come. And I know that we saw something similar like that happen back in April and May, right? March, April, and May of 2021.
We sure did. We sure did. Here it is. Here we are zoomed in. Here's May of 2020. We'll even zoom out a little more so you can see the capitulation for reference. This was growing into the bull market. There's obviously a couple of periods where it flashes down. This could be wallet management. It could be a single person selling a bunch of coins from different addresses. It's hard to know. So that's why we look at the trend. But as you just mentioned, and I'll throw my drawing tool back on here one more time, this was the peak. It came in the middle of February and began its decline long before the market itself began so.
Yeah, it's crazy.
It also found a bottom before the market found a bottom, about a month before. So I think that's pretty interesting. This is kind of a distribution of minnows. Minnows are usually the colloquial term for people with one or less Bitcoin, small fish. And they were clearly distributing their holdings in some capacity from basically the all-time high break.
Pretty amazing.
It is.
And I'd look over there on the right side of the screen and I see it rising. Do I draw anything from that?
So that's tough, BCB, because as we explored, this metric is kind of perpetually growing, right? It's a rate of change thing. But when we zoom in, it clearly started bursting right here. And these are balances, these are addresses with only one Bitcoin or more. Now, it could go all the way up to 1,000, but the fact that we have this on such a low filter and we see this rate of change, I mean, this is a lot, this encompasses a lot of investors. So when I see a rate of change like this, which is very similar to this rate of change, it does look positive, especially in the context of the price action.
I'd agree with you because can you zoom out just a little bit? Can we look at all of 2021 and late? Yeah, there we go, right there. That's good. Is that you look at even the peak that came in there back in November and December, and you can see that group they were distributing already November of 2021. The most
November
recent
of 2021.
Yeah,
Yeah,
look,
right
they
here.
were distributing right into that already. They knew to start distributing, and they were not accumulating. The dips come, and then now here we are as we're at these lows where everybody is scared. Boom, they're popping up.
Right.
Hard to draw something from that, but when we look at what has happened with them historically, they seem to distribute properly on time.
Right.
And
It's the change of direction, right? The rate of change and the directional difference is really the signal rather than it's going up and to the right. You're right. They do seem to distribute at key market points. Like this is at the actual Pico bottom. This was at the all-time high. This was, 50K. They started distributing. These are like big points in the market.
yeah, and like if we zoom this out a little bit more, can we go back and look at all of 20? Can we
Yeah.
include 2018 in this too?
Yeah. Let's go back.
There we go. Like you had just pointed out there, before the capitulation happened back there in 2018, they started distributed early, right? Back in 2000,
Yeah.
right?
Right here.
Right there. So like right now, everybody's kind of worried. Is it going to break down? Fair enough question, right? But if you looked at this metric right here, you would say the leading indicator of a bigger breakdown move happening, and especially even back in 2018 before capitulation happened, would be that you would see this cohort falling.
Right.
And we
I
don't
would
see
say
that
so.
right now. And we don't see
Especially
that happening.
because yeah, exactly. We don't see it happening now. And we have two very strong data points of them rolling over before market trend is actually captured. Right. I mean, this is obviously at the tail end of a bear market, but
Right.
nobody knew that this was coming right here.
Yeah,
Everyone thought 6K was the floor.
they did.
And
I remember
I'm
it.
sure enough, minnows were distributing. And that's what we got up here. Everyone thought when we were at 50K that we were going to 100, which you have said 1,000 times on your channel. But sure enough, minnows were distributing their coins, collecting profit likely from all of this.
Yeah, that's amazing.
Yeah.
So, all right, that's cool, man. I think that's probably a good starting point for just kind of showing some people on my channel what on-chain is. I think the thing that we've derived, if we can go back and look at what we were talking about when we started out, is just that, if really though, even the on-chain stuff, we look at the big picture, it was a bearish divergence that set a new all-time high. There's nothing really big pointing to we're in a bull market, right?
I agree. There are more data points that suggest we are not in a bull market than otherwise.
And I don't want to back you into a corner to make those be your words, but can the data? So I think the thing that people care about a lot right now is that, okay, if the bigger picture, the bigger landscape of it is we're in like long-term consolidation, we're in long-term bear market for Bitcoin. One of the things I talk about and have pointed to in previous cycles is that, there's a retracement that comes in, right? Frequently, most markets, nearly all markets, there's a retracement that eventually comes in. And that's what I'm waiting on right now. But everybody's scared, we going to 25K, we going to 51K, which one's coming first? I know that you venture away from on-chain data too. You look at a lot of other different aspects of markets too. But can the on-chain data right now give us a clear picture of a retracement? Or is it better at really giving us this bigger picture of what's going on here, that kind of the peak transactions count, the peak activity has already passed us by and we're kind of in this like long period? Can it give us more insight into, hey, a retracement's coming around the corner, or do we need to peek in other places?
That's a good question. And I think generally the market is so complicated right now. There's so many different ingredients in the pot. And I think on chain is not ideally suited to show us when the market is prepared to reverse. It can show us that we are in a value zone historically. It can show us, as you mentioned, there was a bit of a bearish divergence in the second half of last year where we set a new all-time high, but we weren't making new highs in activity metrics, which has happened in all previous all-time high breakouts. So there was definitely some newer dynamic going on in the last few months when we made a new high that seemed to suggest that we have entered into a bear market already. The declining activity, you can see it right here on your screen. I mean, just look at active addresses. It is structurally declining since the all-time high, right? That's not the behavior that you see in a bull market, right? So I think that there's definitely some fundamental things we could look at that are not showing us the point of reversal in on-chain or much bullishness at all. We see stout supply dynamics. We don't see a lot of people dumping coins like we explored with exchange balances, right? It's very mixed. But in my opinion, we will not see the retrace rally or the next volatile directional move come from on chain. I think it might be one of the last data sets to confirm that thing, to confirm that move. So what I would probably look at, what I look at more in the near term, I would say probably derivatives like the perpetual futures market, where there's a lot of liquidity and speculation. That's probably going to show signal before the on-chain does, I would guess.
Awesome, man. I love it when you pull that stuff up on your channel too. If you have anything you can show
Sure.
us on that, that would be cool.
I can.
And so,
Okay.
essentially what we're trying to see is, right, I would say on-chain does point to Bitcoin's in a bear market. That's also what I believe, is that Bitcoin is in a bear market. The question is, can we get a retrace rally to come in here and get Bitcoin back to, 50 to 60K? But it doesn't look like on-chain can truly give us that microscopic of a view that we want.
Right.
But I've seen you talk about this stuff before. I think it's incredibly interesting. I agree with you. So yeah, dive into this right here.
Sure. So what we're looking at here is mostly about this indicator on the bottom. I'll make this a little bigger. At the top, obviously, we got Bitcoin. And this down here is an indicator that I wrote that is showing us what is called the perpetual futures basis. So for your audience that is not familiar, there are two markets, primary markets for Bitcoin. There is the spot market where people buy physical Bitcoin. If you are buying BTC to own it and hold it, you're buying in a spot market. That's what Coinbase is. There's also the futures market, which is a derivative, which is not actual physical Bitcoin that you are trading, but you're trading bets on price action, essentially. And that market runs alongside the Bitcoin market. It's where there's a lot of speculation and there is very high volume. The volumes in the futures market blow spot markets out of the water. There's high liquidity there. And it's a good place to observe trader sentiment and bias, for lack of a term. So aggressiveness, whether to the long or to the short side. You can see those things manifested in the futures market. So this indicator down here is showing us how the spot market is pricing itself compared to futures, because they have different prices. Every market has its own price for Bitcoin, just like each exchange has a slightly different price, right? We know they're all a couple of cents difference from each other. Each of the futures markets, so FTX has a futures instrument, Binance has a perpetual future, Bybit, which is another exchange, they have a perpetual future. There's a couple dozen of them, and each of them has their own price. And I have been charting it here on this indicator compared to Coinbase, which is the primary spot market for North America. So now that I've explained all of that, why does any of that matter? Well, what we have observed about Bitcoin in the last couple of years is that it goes through these phases where the perpetual basis will spend a period of time at a discount to the spot market, which means that all the futures markets are cheaper than spot Bitcoin. When I throw a box on this area right here, what it's showing is a sustained negative value. You see the red line down here and most of the green bars down here. These are all representing individual little markets. This period of sustained discount occurred during the summer sell-off, right? From May, June, and July, as we were at the bottom, accumulating and preparing for the next rally. The futures market, first of all, was recovering from a massive liquidation event here that wiped out all speculation for many months. But what that led to was about 2 or 3 month period where we saw absolutely zero aggressive long behavior out of the futures market, meaning there were not a lot of traders betting on price to go up, because if they were, they would be heavily bidding in the futures market and pushing its price above the spot market, which would show a positive value similar to what we had back here as we were chopping around near the all-time highs. This is what aggressive long behavior looks like in futures. People betting on price to go up with high leverage, with a lot of confidence. That looks like this behavior. Quite different from this down here, wouldn't you say?
Yes, and it looks like when it's, upward and on the top side, that's approaching a top too, right? So I mean, you kind of got to be watching out for a
It
top up
is.
there.
It's very high risk. And granted, this period of the market here from February to May was some of the highest sustained periods of leverage that Bitcoin has ever seen. So this was an absolute just ape fest market. And the reason I explained all of that is because, if you look now, you see this sustained period where we had negative values before it finally released and we got into more bullish price action.
Right.
Basically, since December 4th, we've been in another one of these periods. And it's actually, for what it's worth, a much cleaner, sustained, and deeper discount than what we ever saw back here in June and July.
I
Now,
know. That's crazy. It's so
it is
clean.
crazy.
I mean,
It's
because
very
we
clean.
talked about this, right? So we're like, it's not even that. So you just drew that middle box, right? Even that one's just like a little bit sloppy, right? A little bit. But
Yep.
look how unbelievably clean that right one is.
Yeah. And this is showing, man, that there is absolutely no aggressive long behavior in the futures market. It has been battered into the ground. Sentiment is at its worst. There is no one pushing an aggressive long agenda in the futures market. And as a result, the perpetual market as a whole, all of these little instruments that I have listed here with different prices, all of them are below Coinbase. And that normally happens in these bearish periods. We have a lot of people hedging their bets, a lot of people buying downside protection, and conversely, a lot of people that normally go giga long on leverage just sitting on the sidelines. They're not even in this market right now. And so what I'm watching for from a technicals perspective is to see this trend begin to soften. Because if I wake up in a couple of days and this is bounced up here and it starts doing this rather than staying down here, that is a notable core sentiment shift in the market where all of the speculators for Bitcoin live. They live in the perpetual market. So when we look at this change here, we will be actually visualizing a change in their sentiment about Bitcoin. So I'm watching this closely to start looking more like this.
Yeah, and when we talked about this earlier, and when I'm looking at this on the screen too, it shows, the way I interpret it when I look at it, like I look at it and get like bullish. I'm like, man, I can't believe you discovered this, because each time this happens, look what happens to the price. It goes up. Anytime it's up here on the upside, the risk of down becomes more apparent, but each time it's hovering down here, it points to going, right? It points to it. Now it could look, you can obviously, it could stay down there a long time. You don't know how long it's going to stay down there until it finally starts reversing course. But like you said, people hedging, in other words, people shorting, right? Would you say that? Is that,
Yep. There are people shorting, people hedging. And, when you look at some of the traditional market indicators, there are record volumes of people buying puts in options, people buying downside protection. That is also true of the Bitcoin market and crypto broadly. We have institutional investors here now, and they behave in the same way they do with traditional risk assets. And so they are hedging themselves in a period of massive uncertainty in the markets. And we're seeing that in this sustained, almost unbreakable trend. I mean, look, it's been completely unable to get back into the positive for any length of time. So when this trend breaks, I expect it to be at a time of clear sentiment shift in the futures market. There's no other way for it to happen at this point.
Can you also show what that looked like after March of 2020?
Yeah, let's do it. So here we are in March of 2020. And you can see we also had, so what happens when you get a sell-off, when you get a big liquidation like this, it pushes the futures price far below the spot price because of cascading liquidations, right? Because one guy's stop loss becomes another guy's sell order, and it just cascades all the way down, and it shoves the futures price into the basement. So you get these like sharp divergences downwards. But what really came in was from middle of March all the way until, this looks about middle of May, a solid 2 months of a negative discount regime, just like we're experiencing right now. Very heavy, very consistent. But even so, if I zoom out and we look at, oh, my boxes are all overlapping here. Sorry, because of my axis. But if we look over here, this box should be orange. It's not the same amount of time as over here. We've been experiencing, I know this is getting really messy.
No, it's okay.
This box is much longer than what we experienced in March of 2020. This was about 2 months, right? If I throw a date range on here, that says 55 days. Let me make that black. That's 55 days right there. We're at 108 days. So we're at almost double the amount of discount regime. The one in the summer, the one in June and July, was also, I think, about 80 days, 78 days, 77 days. So we are in the longest one of these stretches we've ever experienced. And it's also, as we pointed out, one of the most consistent in terms of just not breaking, right? There's been no chop whatsoever. So it's a very clear trend. It's not the only signal to be taken from the futures market, but when you see something that is this clear, right? You're just waiting for a break of this trend is going to be a significant turn of events, I would say.
And I look at that and I get optimistic, right? Because I'm like, all right, like I'm looking for a retrace. If we can't see it in the on-chain, can we potentially see it right here too? Is that you look there, that's what happened, and then price went up. That's what happened in March of 2020. And we look at it whenever it becomes positive, that's when things start getting worrisome. And even can we go back to March of 2020 again right now and look at what did it look like before that collapse happened? It was all positive. It was all positive. Then a collapse just came in. But after, when it was negative, that was a more optimistic scenario. So in an accumulation sideways structure, even look over here back in December of 2019, it was all negative right down in here, right? Eventually led to a rally. And then once it was all positive, watch out. And then, negative. So if you're looking for upward price action, you're probably wanting to see this thing negative. If you're scared of downward price action, you're gonna see positive stuff on the front side of it.
That's in a sense, yeah, and it's also a byproduct of the market itself, right? Like this is showing in a way the sentiment of speculators. So when price is going up, they're feeling confident and they're betting on number to go up. And so when you start to see that behavior unfolding, like when we get back over here, if we start seeing like this again, then this kind of behavior, these are people betting on number to go up. That's when we should start looking for the bearish divergences that we talked about earlier in the call.
Yeah.
Relative strength waning, active addresses waning, while speculators are still going gig along. That's a sign of weakness.
So what we're seeing we're seeing negative, which is a positive sign, I think. Based on what has happened in the last 2 years, those were good things to see. What we're seeing right here. We're also seeing addresses greater than 1 rising, but it looks like from on-chain, it's pointing more towards just kind of a broader, Bitcoin is in kind of the bearish market. But if we're looking for a retrace to go on here, something you wouldn't want to see happening is you wouldn't want to see addresses greater than 1 Bitcoin falling, which we don't see that. We see it rising. And we wouldn't want to see this in the positive. We see this in the negative. That's historically been a good thing over the last 2 years for price to go up.
Yes. And it's important to see all those things together.
Right.
And I think that's something that I like to convey to my audience on my channel. And when I do those Twitter spaces, whenever I talk about on-chain, it's important to look for confluence across a host of metrics, because you can see something in 1 or 2 places that looks one way and is being totally invalidated elsewhere. So that's why I try to have a holistic approach as much as I can.
Well, dude, this has been awesome, man. I really appreciate you coming on my show. We're already pushing on this video, getting, between 30 and 45 minutes. I don't want to take too much of your time, but I'd like to have an open invitation to invite you back on sometime. I always enjoy chatting with you and shooting ideas back and forth with you, and I appreciate you coming to share this with my audience. Can you give them an idea of where they can find you on social media?
Absolutely. And first, let me just say it's truly a treat and an honor for me to come on here. I've been watching your channel for over 2 years, and I feel like I've got a friend, and it's very cool to be able to come on and talk about something that we both find very fascinating and that we're very passionate about. So thank you for having me. I will come anytime you invite me.
Man, like I said, man, the thing I enjoy on those Twitter spaces, they always invite you on stage because you do such a good job explaining things. And I agree with that so much. I think you do a fantastic job. So the honor was mine too. Thank you, man. Before somebody comments that we need to get a room, why don't you tell me what your social media is? About that, I cut you off too.
No, it's all good. So you can find me on Twitter at TXMC Trades, Trades. I post a lot of analysis and charts on there. I also have my own YouTube channel, Alpha Beta Soup with TXMC. If you search for my name on YouTube, you should find it. Or if you search for Alpha Beta Soup, you can find me. And yeah, I do on chain. We talk about derivatives. It's mostly Bitcoin focused. But I also try to sprinkle in some macro and some traditional markets as well.
Awesome, my man. Well, all right. Thank you so much, TXMC. I'll reach out to you again. Guys, if you liked this, comment below, hit the like button. Let me know if you want me to bring him back on the show. I'm sure you will. But otherwise, thank you, brother. Have a good one.
Thank you, man. Take care.
All right, guys, that's it for this one. Taking a look at the market, we've turned green for the day, which is pretty cool. We were red when I started this thing, but here we go. We've flipped green to finish the day off. Thanks for watching. I'll wrap this thing up quickly so you guys can get on with your day. I hope you enjoyed that. It was a lot of fun talking with him. It was great to have TXMC on the show. But all right, that's it for this one, guys. Thank you so much for watching. If you're looking for something to do throughout the weekend, you can check out bcbacker.com. This is a course I put together where I deep dive into the previous Bitcoin bull runs, the previous altcoin market cycles, tying them all together to show how the cryptocurrency market has worked in the past. I teach you how to set up your own charts and your own indicators within TradingView and CoinTrader Pro. I talk about my own personal exit plans in there. And then the most recent market update is down there on February 28th. And you can check out all of this educational content over here on bcbacker.com. You can follow me over here on Twitter at bcbacker. And I want to thank you so much for watching my channel. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.